Time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. Starting last week, we started our hour-long show, so from 3 to 4, you can call us with any of your tax questions. Our phone number here in studio is 8030930, 8030930, star 930 on a cell phone, and of course, we want you to join in because there's nothing like your questions that makes everybody say, wow, I never thought about that. I didn't know there could be that kind of a problem. So 8030930, 8030930, star 930 on a cell phone. And, of course, I'm joined in studio with my sidekick, Steve Jacobson, our Assistant District Manager and Marketing Director. Hey, Steven.
Hey, Esther. This weather out here is incredible, isn't it? 58 degrees.
Almost 60 degrees in January.
Oh, wow. Yeah, it's unbelievable. This is great.
All the snow is just about gone.
That's right, and that's Tiffany Fabian.
Hello there, Esther.
Chris is doing training today, right?
Chris is training some more of the troops. He told me if you take the last 8 days, he's been training for 5 of them, and he is a tired puppy.
And that's the other thing we want you to know is that even though the IRS has delayed processing and accepting of electronic returns, we're open for business at all of our offices, and we're open 9 to 9, starting January the 16th.
Right.
And so even though the IRS won't accept the returns, we have the software, and we're ready to go. So don't wait until February to get your taxes done. Come in ASAP. We'll get those taxes ready. We'll just put them on hold, and then, boom, on the 30th, we'll get them going, right?
On Friday, I did 4 2012 tax returns, and, Steve, I know you did.
I did a couple.
Yeah.
I got a couple
Chris
down.
Chris did a few, but absolutely. We had walk-ins, and our receptionist was like, holy cow. I said, but on the 16th, when all the other offices open, we won't be inundated as much because it'll be spread.
Right. Okay, so as we alluded to, and again, this is Esther Gulius, the tax lady from EG Tax. We have like 27 area offices to serve you starting January the 16th. Our website is egtax.com. You can email us tax questions. We will email you back. Mm-hmm. If you get audited, even if we didn't do your return, and by the way, the IRS is increasing audits, so things are going to become more and more hectic as time goes on. You can call Auntie Esther in the group here, and we will help you at no charge. So our phone number here in studio is 8030930, 8030930, star 930 on a cell phone. And I just want to let you know that IRS is delaying processing and accepting of tax returns until January the 30th of this year. Now, that doesn't mean that we can't prepare your return. That means that we can't get you going. That doesn't mean that we can't tell you about all the tax law changes, but they will not accept until January the 30th. Now, why would that be, you guys?
Well, the fiscal cliff and all that drama at the end of the year, and it took so long for Congress to get their act together, and so now the IRS is scrambling to make everything right. To
update their forms and update their computer systems.
Yep. That's exactly right.
Yeah.
So why don't we go right to the phones, and we'll talk about taxes again here in a minute. Why don't we go to Gary in Hamburg? Hey, Gary, how are you? This is Esther Gulius.
Hi. My question is this. Just before the end of 2012, I won some casino money, a couple $1,000. And, of course, they were there with the W-2G form that was filled out. Am I allowed to, because they also give you a printout if you request it, on winnings versus your losses for the year?
Okay, you guys want to tell him the news?
Hey, Gary, you have to report all winnings, no matter if there's losses to offset them. Now, the losses can go on your Schedule A, but all winnings must be reported on line 21 of your tax return. The slot winnings, the table winnings, all winnings.
And then you would write off up to the amount that you've won. But really, it's only going to benefit you, Gary, if you already itemize to where you'll be able to wash away all that income.
So are you somebody, Gary, that normally writes off his deductions on the Schedule A?
No.
So you may get some benefit, Gary, but you may not be able to, at the end of the day, be able to have a complete washout of all that additional income.
So are you single or married, Gary?
Single. Why, you asking me out?
So you
Happy New Year.
Deduction's $59.50, okay? And now, how much were your gambling winnings this year?
Well, the winnings of this one day alone was just over about $2,050.
Okay. So how much would you say all your winnings were during the year?
That's hard to say. Maybe at the most about another $500.
All right, so really, you're going to end up with being able to claim your losses, if you had lost as much, most people do, as what you earned. So you're going to end up with an itemized deduction of about $3,000. Do you own your own home?
No.
Okay, so you're a renter. Are you giving large contributions to charities?
No, not really.
Did you buy a new car last year?
No.
So probably in your case, you're one of those people that is actually going to end up claiming the income on line 21, and you're going to get no benefit for itemizing because your standard deduction, you got to work it all out. But if your standard deduction doesn't exceed $59.50, it's not going to save you any money.
Okay. All right, thank you.
Sorry.
Congratulations on the winnings, though, Gary.
Yeah, but hey, look at it. Even if you have to claim the whole income, you know, if you're in the 10% tax bracket, it's $200 in taxes. So it's not the end of the world.
Absolutely.
All right?
Absolutely.
All right, well, before we get to the phones, let's talk about not only is the IRS delaying the filing of tax returns, they're also, in the past, they had always given us a refund schedule. Right?
Yeah.
When we could anticipate somebody was going to get their refund. And generally, it was the second Thursday after they filed electronically. Why don't you guys talk about what's happening now?
Sure. I did a few tax returns on Friday, as I said, and I showed them. I said, now, this is the refund cycle that we've had for the last 12, 13 years I've been preparing taxes. This year, we don't have a refund cycle chart, and they're saying that you'll get your refund within 21 days, so you could have it
21
in 14 days
on average.
15.
That means some people are going to be longer and some are shorter. And we're going to break right now, and when we come back from break, we're going to tell you what you can do to take control of your refund so as things roll out and as Obamacare comes in, how the people of Western New York will know what to do so that they aren't at the mercy of whenever the IRS gives them their tax refund. So hang on, and we'll be right back. I'm Esther Golias, the tax lady. Now, you know, I'm the tax man because then I can make it the tax lady, right? Because
the bottom of the hour break.
I'm Esther Golias, the tax lady from EG Tax, and we're here to help you get ready for the 2012 filing season, which ends April the 15th, 2013. And we're going to give you the good, the bad, and the ugly, but more than anything, we're going to tell you the truth so that you know how to file your taxes and you're more abreast about the tax situation than anybody else. Some of the things that are going on right now, we told you guys a year ago, and they're coming to fruition. So I'm Esther Golias, the tax lady. I'm joined in the studio with Steve Jacobson and Tiffany Fabian. And if you have any tax questions, 8030930, 8030930, star 930 on a cell phone, and all of the EG Tax offices are going to open up 9 to 9, January the 16th. And as we told you, even though the IRS has delayed the electronic filing date, till January the 30th. Come in, get your return done. We got the software all ready. We'll tell you the straight scoop, and we'll get you going. So, boom, as soon as we can send them, we will. Right, guys?
That's right. But, like you were saying before we went to break, Esther, there are things that you can do if you are one of those people who like getting the refund and getting that big refund to help you out. There are other things that people can do as opposed to waiting for that big refund, essentially.
Okay, so, Stevie, not that we haven't said it 8 trillion times. What can people do? All right, guys, this is it. We haven't told you before. What can they do?
They can change their W-4 so that they get their money throughout the year.
Now, why would I want to do that?
Because then you're getting your money when you need it. You're not racking up, let's say, credit card debt or things like that, and you're not giving the government an interest-free loan.
Okay, so look at on February the 1st, when your return is sent to the IRS, they're saying the average time of turning around your refund is 21 days. So some of you might wait 30, 35 days. So that means you're not going to get your refund until March, sometime in March, right? Even filing
actually,
electronically.
it says within 21 days, but...
They said the average refund, the average, if you take a look at their website, average refund is in within 21 days. So it means it may take longer. Do yourself a favor. And next year Obamacare's rolling out, and they're promising they're going to even be later. What CD says is right. If you change your W-4 at work so you get your money as you earn it, instead of sending it off to the federal government, because it's your money, you then will get your refund as you earn it during the year, and you won't be reliant upon the federal government to get your money next year.
That's right.
Right?
Absolutely. Absolutely.
And those of you that have gotten your first paychecks, you know that you've already gotten a cut because your FICA went up by 2%. So those are just some of the things that are happening on your tax return. I will tell you, if you need help, you can call our office, our corporate office, or any of our branch offices. You can go online and look at all our branch offices, and a real person will answer the phone, and a real person will give you tax information. And if you get audited, come see us. We don't charge you to get you through the audit.
That's right. That's right.
Okay, let's go back to the phones. I think we have, is it Mark and Kenmore?
That's right, Mark. You're on WBEN. How can we help you?
Thank you. Told you, asked her, like the previous caller, no, I'm not asking her out because my wife is right here. and besides that, why would you want to take out a 75-year-old man out?
Because I love 75-year-old men.
No, I would have to fight you over it, Esther.
I said 75.
All right, well, Tiffany and I will roll you for it. So what can we help you with, Mark?
You will roll me. Okay, here's my question. My wife and I had this man do our taxes for the last 25, 30 years, and he moved from North Buffalo to Amherst, and now that my wife and I are not feeling too well, and she's no longer be able to drive, we're not going to be able to go way out there, and you just open up an office. You're going to open up an office right here on Delaware near Sheridan. And my question to you is, are you going to stay there? Because I seen your office is closed at the end of the tax season. And
we have a long-term lease there. We're really blessed to have that office on Sheridan, not too far from the Walmart there. So we have a great staff. We have a revenue agent there, which means that they're licensed to practice before the Internal Revenue Service. High-quality people, and we'll be very happy to help you.
Now, what is a long-term CISO in your opinion?
Well, long-term lease, I mean, I believe we have a 2-year lease or a 5-year lease?
2 or 3 years, yeah.
So what
I think you're going to find we're not going to be going anywhere.
Okay, because right now we don't want to get too far out of here anymore, and we need somebody close by. And
well, we would take care of it. I will tell you, Mark, and just for everybody else listening, we will actually stop by and pick up your tax return if you can't get out. If you call us, we have kind of an in-home specialist that will stop by and pick up tax returns for people that are unable to get out. So whether it's the Amherst office or you call our corporate office, we'll make sure that we accommodate what you need.
Okay. All right.
Okay.
That sounds fair enough.
All right. Thank you, Mark. Happy New Year.
Before the radio show, Esther, I was at the office doing some callbacks that I didn't get to call on Friday, and one of them was a gentleman who was listening to AM Buffalo, and he lived in Depew, and I said that somebody from our Depew office would pick up his return. So you are dead on, and we will take really good care of Mark and his wife.
You know, it's interesting. It's like you were shipping me something, Tiffany, to the Florida office here.
Yep.
And I said, well, if you really want to make sure you get it, you really wanted to get here on time, I would send it to a private postal service like UPS or FedEx,
Right.
because when it's private, people will lose business if they don't fulfill what they're supposed to do, right?
Yep.
As opposed to the post office who says, you know.
Yep.
So, and that same thing is true when you're dealing with a private tax firm. If we don't do a good job, we don't stay in business, and that's what we're all about. We want to do a good job over and above what we charge.
That's right. Exactly.
Because we want to do whatever it takes to make our clients happy.
And I think
that's the only way you can grow.
More importantly, is you've trained all of the staff like that, and so we tend to follow suit, which is a great thing.
Absolutely.
Right. Okay, we're going to go to Joyce. Hey, Joyce, this is Esther Golias. How can I help you?
Oh, yes, Esther. I have a question on education savings bonds.
Yeah.
If I cash them in order to fund my 529 account, can I still take the deduction for contributions on the New York State taxes?
Okay. So the deduction for savings bonds is for when your dependent in bonds you own is going to college. It's strictly for college expenses.
Right.
So if you're cashing it in to fund a 529, the interest is not deductible, okay? But the 529 contribution over and above how the money got there is deductible, okay? So you're not going to get a federal contribution, but you will get the 529 contribution if you cash those in to fund your 529.
Okay, I didn't know whether that was considered double dipping or if it counted.
No, it's not, because you're not going to get anything on the federal. You're getting nothing on the federal, but you're funding a 529. So no, you can fund a 529 with whatever you want: pop bottle sales, interest from your savings bonds, money you save from your paycheck. However you fund your 529, you're going to get a deduction on your New York State return for that. So, but you're not going to get the interest deduction on the federal for education when you're cashing in savings bonds, unless it's to pay for a dependent child's dependent's education expenses.
True, but that interest is tax free.
No, not if you're taking it out.
Not in this situation. No.
Even if it's an education bond.
That's right. It's not, and unless you're funding it. And then the other thing is, here's the complexity. You know, this is what's so hard about taxes. Yes, there's a deduction for cashing in a U.S. savings bond if you meet all the criteria for funding a child's education or a person's education, okay? But the credit, the American Opportunity Tax Credit or the Lifetime Learning Credit, is so much better than the deduction for the savings bond interest. You would never take the savings bond interest over the credit.
Okay.
Right.
Okay. I mean, so yes, you might end up with you won't get it in this case anyway. But if you could, if you got a deduction, it would be such a small deduction versus the credit. You would actually be shooting yourself in the foot if you did that.
Okay. All right.
Okay.
Thank you.
Thanks, Joyce.
Really good.
And that's what happens, isn't it true, guys?
There's so many
we see people that don't know the tax law, and it is very confusing and very comprehensive. And if you do this, then it affects that. If you do that, it affects the other. You have to know what's the best thing to do, because yes, you could do a deduction. For instance, if she did qualify for the education saving deduction, she could take that and they would say that's correct. However, she just cost herself $2,250 in taxes because she didn't do the American Opportunity Tax Credit, right?
Which is the best credit that I've seen in years. Yep, absolutely.
Right. So you certainly want to do the credit. Plus, on the state of New York, you also get an education credit, and the education credit in New York State is refundable. So you want to make sure that you know what you're doing. And I will tell you, I was talking to a lady this morning who had done her own tax return, and quite frankly, she was not reporting all of her income. And I said I wouldn't do the tax return unless we reported all the income. Now, she has 4 children, and she qualified for the Earned Income Credit, and all she's been claiming is her W-2 income, and she has a cleaning business. Had we put her cleaning business income, and it's a legitimate business, her Earned Income Credit would have gone up by $3,000 had she claimed the income. So I'm having her show me all the proof that she had a cleaning business. She got business cards and everything, and she thought she was doing herself a big favor by not claiming the income. But the tax law is so comprehensive and so confusing that actually claiming income in some situations saves you money.
That's right. Yep. That's
right.
And there's so many people that shoot themselves in the foot, as you said, because they don't do it. And this year, the EIC due diligence for a self-employed person became much more stringent, and so that's why you're having her look at her books.
Hey, do we have time, Stevie, for Ruth in Tonawanda?
We could definitely try. If not, we'll just hold her over the break. Hey, Ruth.
This is Esther Goulias from EG Tax. How can I help you?
Yes, I was calling about sales tax on a new car. Can it be declared without? I normally do not itemize.
Well, good news. It wasn't supposed to be in this year, but when the fiscal cliff negotiations happened, they said sales taxes are back in. So would the sales tax be on your new car? And if your itemized deductions exceed $11,900, are you a married lady or single lady?
Single, widow.
All right, $5,950, including your property taxes and your contributions and everything. Then yes, you'll be able to take the sales tax deduction on your car.
All right, thank you very much.
You're very welcome. Did I do good, Stevie?
You did. You wrapped that up very quickly.
So we're learning how to do an hour show. We've done a half-hour show for years. Now we're learning how to do an hour show, which means it has breaks and everything. And I'm not used to breaking because we just go on and on and on and on. Do we have time for another call, or should we just break for news?
You know, we're gonna probably start. Yeah, we gotta. There's the music. There's your answer right there.
All right. So we'll join you on the other side of the news break. I'm Esther Goulias, the tax lady, with Tiffany Fabian and Steve Jacobson from EG Tax. Give us a call, 8030930, 8030930, star 930 on cell phone. We want to help you. We'll see you on the other side.
Let me tell you how it will be.
Oh, the tax lady. That was that famous Beatles song called The Tax Lady. Oh, no, it's The Tax Man. I'm Esther Goulias, the tax lady. Join us here in studio with your questions and your concerns. 8030930, 8030930, star 930 on the cell phone. And this beautiful sunny day in western New York, as we told you before, the IRS is delaying accepting of electronic returns until January 30th. But we're ready. All of our branch offices are open as of the 16th, and we want to help you. We can get everything all ready. Our software is ready to go. And as soon as the 30th happens, boom, we send it electronically, and you'll be the first in line to get your refund. So don't wait to make your appointment. The other thing we wanted to make sure that we told you was that if you think that you're going to delay of your refund, because they're talking about a 21-day turnaround this year on refunds, we will help you. EG Tax will help you at no charge to help you to change your W-4 so you can get your money up front. You can call any of our branch offices, and you can go to egtax.com. We'll give you all the phone numbers, and we're there to help you. And if you get audited, there's no charge. We'll be very happy to help you with an audit situation, even if we didn't prepare your return. So that's it. And I'm joined in studio with Steve Jacobson and Tiffany Fabian. Hey, guys.
Hey there, Esther.
So we've been waiting a long time from Orchard Park. And again, 8030930, 8030930, star 930 on a cell phone. And let's go to Patient Lee in Orchard Park.
Lee, are you there?
Yes, I am.
Hi.
Hey, Lee. How can we help you?
Hello. I just took a safe driver course for seniors, and I was wondering if I can claim the tuition cost as a deduction.
Okay, guys.
Does your job involve any type of driving, or was it for your job?
No, it was just I'm a senior. I don't work anymore.
Yeah, unfortunately, you won't be able to save on your taxes, but you'll probably be able to save on your insurance check, which is really great.
On your car insurance,
really,
for sure.
Really good question.
It's not a tax.
And I have one other question. In 2012, is there any tax credit for installing energy-saving double-pane windows?
That's funny she mentions that.
Tell her about the energy credit.
Well, originally we kept telling people all year round, nope, it's gone, it's Kaputski, they got rid of it. Well, guess what they did during that fiscal cliff patch? Not only did they reinstate it for 2013, but they even backstated it all the way to the beginning of 2012. So for those of you who did do energy improvements, windows, doors, insulation, furnace, hot water heater, air conditioning units, biomass stoves, all that wonderful stuff, you can still take a credit for that lifetime up to $500. So if you took it in the past, you're limited by how much you've already taken it on. So if you've already gotten all the $500 before, you can't get it. But if you've never taken it before, Lee, or haven't gotten the full $500, you can still get something for it.
Okay, thank you very, very much.
You're very welcome.
Thanks,
Bye-bye.
Lee. I'm Esther Golias, the tax lady. Our phone number here in studio is 8030930, star 930 on a cell phone, and we're really excited because this is our second week of our 1 hour show. And so those of you that have tuned in at 3:30 thinking, wow, Esther should have just started. We've been on for a half hour without you. So kind of readjust your mental clocks, and from now on we have an hour show, and many of you have said for years, this is too fast, a half hour is too fast. Well, now we got an hour. So, and again, call us with any questions, 803-0930, 803-0930. All right, now this time of year, let's just talk about nuts and bolts. People say, should I claim my kid who is 17 and just started working? Do they do their own return? If I claim them, do I have to put their W-2 on my tax return?
And after you, Tim.
Yeah, I was going to say, generally, no. You should still claim them. The law says you can claim your kids until, as long as they're under the age of 18 or 24, as long as they're a full-time student for at least
under 19. Yeah, it's 19, and after 19, if they're a full-time student, up to 24.
24, right.
But
as long as you support them more than 50%.
Well, Tiffany, what do you do with their W-2?
Sure. They're going to file their own tax return. That W-2 is going to...
They are? You mean I don't put it on my return?
Nope. They're going to be marked that they're a dependent on another person's return, so they're going to lose their personal exemption, but they will put that W-2, they'll put that puppy on their own tax return.
That's exactly right. So mom and dad don't put the... So if you're a mom and dad who put Junior's... income on your own return, and you claim Junior, go back and amend the return.
Absolutely.
Because you shouldn't have done it. Junior should have filed his own return.
That's right. And if Junior went to college, then make sure you do the college credit on the federal and the state, because it's a great credit.
Okay, so why don't we talk about the American Opportunity Tax Credit? So that was supposed to go away this year, but it's been re-upped, and the American Opportunity Tax Credit works like what, Steve?
It works like, well, part of it's what's called a non-refundable credit, and the other part is what's called a refundable credit. What's the difference between the two? Well, a non-refundable credit only eliminates your tax liability, so really the most you would get back is whatever you had withheld. Whereas a refundable credit works where it not only can eliminate your tax liability, but actually pay you money. So at the end of the day, even if you pay nothing in taxes, you can actually get up to $1,000 in refundable credits for this. Oh, and it's up to $2,500 in total credits, which is part non-refundable, and then the $1,000 refundable part of it.
And so, let's go back to the example where the 18, let's say it's an 18-year-old kid, he's graduated from high school, has a part-time job, and he's in college. Who would claim the AOTC?
Mom and dad. Absolutely.
Mom and dad. Unless the kid is like a prodigy, like if he's making $25,000, $30,000 a year and he's supporting himself, that's different.
Right.
But if he's a regular kid like my granddaughter, who's making like $4,000 or $5,000 a year, $8,000 a year, they're not supporting themselves. The mom and dad claim themselves. The kid claims their own tax return. The state of New York, they're going to owe money, aren't they?
The kid, yep,
because
absolutely.
the standard deduction in New York State is only $3,000.
That's right.
The standard deduction on the federal is $5,950. So probably going to owe money on the state. But mom and dad are going to save $2,500, right?
Absolutely.
Yeah, that's the AOTC credit, $1,500 on the top, $1,000 at the bottom, and then there's also the New York credit.
And for you parents who have let the kids claim themselves, you have 3 years to amend the return. And even if your son or daughter gets mad at you, I'm going to tell you something. We can make you happy because you can pay back their taxes and you get the extra money back because the kids should not claim the AOTC.
Right. That's
in most cases,
true.
Right?
That's right.
Okay, let's go back to the phones. I think we have Jim in Hamburg waiting, right?
We do, Jim.
Yes.
Hey, Jim, how can I help you?
Hopefully these are easy questions, and you have a wonderful show, by the way. The woman who just called in before that about taking the deduction for the new windows, I had $5,000 worth of windows. What is it, a percentage of that?
If it's windows, you could.
There's a percentage with a maximum. I think it's $200, right?
Yeah,
Steve?
a max of $2,000 in expenses for a 10% $200 credit max.
Oh, that's all.
200 is better than nothing, right?
Oh no, that's true. But do you have to itemize, or there's a certain line that I don't itemize anymore?
You're going to do an energy credit.
So you don't have to
That's something else I should talk about, because not only did they back up filing season till January the 30th, if you have certain credits, of which the energy credit is one of them, you're filing debt. You can't file till March.
Depreciation is another one.
Oh, but I have my appointment in February.
That's okay. We'll get you all done. We're going to get you all done. We got the software. We're ready to go.
And we can tell you the answer.
Isn't it remarkable how the non-IRS can get it done, but the IRS can't? If you look at the IRS website right now, they have all 2011 tax information on there.
Right up to date.
I mean, it's remarkable. I just before the show, I thought, let me see what they got on their website. They're giving 2011 tax tips, but this is the 2012 filing season. So the non-IRS is ready to go. So we're ready to go. We'll get you going.
Okay,
we'll print you out your tax return. You'll know everything.
Question.
And as soon as we can send you, boom, we'll send you.
Jim, what's your second question?
Oh, the second question is, when you're both over 65, is that a monetary deduction? I mean, I see it on here, where your total box is checked on 39A. It'll be 2 this year. But do you get
you're going to get an extra $11.50 per person that's over 65, and your increased standard deduction. And so you and your wife are going to get $11.50 times 2, plus your 38 times 2, plus your $11.9. So your actual write-offs are going to end up being $21,800.
Excellent. You have a wonderful day. It sounds like you got a little cough there, too. Take care of it.
Well, on top of everything, I just got over the stupid cold, and yesterday I got a cold back.
That's what always happens. Murphy's Law.
Yeah, and you know what, Esther, I wanted to touch on what Jim said and what you said. Every year, the IRS sort of does this where there's certain forms that they won't allow to be sent. And so we've really learned to manipulate and handle this. We actually have a file drawer that's set up and ready to go. And so our staff is trained and we're used to these forms.
Yeah, I mean, they've been doing this for the last 3 or 4 years. Yeah. This being probably the worst year, but we're ready to go. Come on in. We'll tell you what your refund's going to be. At least you'll know what refund or balance due.
Absolutely.
At least you'll know so that it doesn't, so that you're not sitting there wondering how the answer is. We're ready to go. Our software is ready to go. We know what the tax laws are, and we're very happy to help anyone. We're EG Tax. And we're at egtax.com. Very happy to help you. And we'd love to help you right now. 8030930, 8030930, star 930 on the cell phone. And do we have time to sneak in?
Pat from Williamsville.
I think Dave in Amherst, right?
We could do Dave in Amherst next. Dave, you're on WBEN.
Hi, I have a question about my son. He's in college, and he's boarding, at school, locally.
Sure. Mm-hmm.
And he's working a part-time job. Probably made about $4,000 or $5,000. So what do I do with him? Do I claim him, or I can't claim him? Or what
All right. Who does he live with? Are you the custodial parent, or is Mom the custodial parent?
Yeah, all together.
All right. So you guys are filing a joint return. You guys are married, right?
Right. Yes.
Okay. Right. So he's under the age of 24, right?
Yes.
And he doesn't have more than 50% to his own support that he's contributing. It has a little bit of income, right?
Right. Weighs about 5,000.
So you're going to claim him as on the tax return. He's an undergraduate, right? He's in the first 4 years of continuing education.
Yes.
So you're going to do an American Opportunity Tax Credit, and for all the tuition and fees that you have to pay, plus books and required supplies, you're going to get a credit, and the maximum credit's going to reduce your tax liability by how much, Steve? $2,500, right?
Right.
So and up to $1,000 if it's refundable, even if you didn't pay the money in. So you'll be very happy this year.
Well, he's paying all that himself on student loans, so we're not really contributing much.
The thing is, even if it's a student loan, you still get to take the expense.
Oh, okay.
Because he'll never get
to. It's like it's a happy event.
Oh, good. Okay. Thanks very much.
Okay?
All
right, good enough. Well, I'm Esther Gulius, the tax lady from EG Tax, and for those of you that are waiting, and for those of you that want to call in, 803-0930, 803-0930, star 930 on a cell phone. We'll get to you on the other side of the break, so hold on. We'll get back to you. I'm Esther Gulius from EG Tax. Talk to you in a minute. Bye-bye. I love that kind of music. I love that kind of music. Anyway, I'm Esther Gulius from EG Tax with Steve Jacobson and Tiffany Fabian, and we're waiting for your call, 803-0930, 803-0930, star 930 on a cell phone, and we are talking taxes because that's what we do. We love to help you with taxes so you don't overpay. It's interesting how many people really overpay their taxes, and I'd love to look at every tax return. I absolutely would, except I guess I would die
so excited. You get so excited. You get so excited when you're trying to look at a return and you're like,
I love it. I love to say, it's like Hitchcock. You look at their tax return and you say, oh my, I thought yesterday I had somebody that sent me a C Corp, right?
Right.
C Corp on a small business should be S Corp. So I called him up and I said, why do they have you as a C Corp? He says, well, I don't know, Miss Esther. That it's just been a C Corp since my daddy had the business. And I said, well, my gosh, you had a $15,000 loss last year, which you couldn't take. And so he's got a net operating loss carry forward and a fiscal year for no reason. So we're going to switch him. We're going to make the election and make him an S Corp. But I mean, no matter what, EG Tax can do it. So if you're sitting there thinking that, and then the other thing, I had another corporation come in yesterday. He and his wife paid $2,500 to have their taxes done last year. Okay? I looked at that thing and I said, I'm going to tell you, I can't think we're going to charge you more than $300. He says, you have to charge me more than $300. I said, but I would be stealing from you. I can't. This is a very simple return. So on top of everything, we do a great job, and we're very reasonable. I'm an enrolled agent. Steve's an enrolled agent. Tiffany's an enrolled agent. We are the land of enrolled agents. We want people that are doing your tax return to know what they're doing.
And Esther,
you can get Aunt Thelma to do it on her kitchen table, but if she doesn't have certification under current tax law, that's not cool. Right, guys?
Right. And you're talking about businesses. I did an appointment for Chris the other day. He's going to a restaurant on Delaware, and they lost their accountant, and so Chris is going there to look at their stuff and see what they can do. So we do house calls, yes, too.
We do. Okay, Pat from Williamsville has been waiting and waiting and waiting. Hey, Pat, this is Esther Gulius. How can we help you? Hey, Pat. Pat fell asleep.
All right, I'm going to put Pat back on hold, Jay, if you want to confirm that he's there and just make sure he's okay.
And so we go to Joe in Hamburg. Mr. Joe, Esther Gulius, how can we help you?
Joe.
Oh, I think Joe fell asleep, too.
Hey, guys, are the phones potted up? Because we've tried to take 2 calls so far. Joe, are you there?
I hear you fine.
There we go. Now we got it. Technical difficulties.
Joe or Pat?
Joe.
When Esther called me Mr. Joe, I had to laugh.
What, you Mr. Joe?
Yeah, he said, we're going to Mr. Joe in Hamburg.
Hey, Joe, how can we help you?
Esther, I'm a disabled vet, Social Security disability, and my wife, she's working full-time. She's 62. She can't afford to retire at 62. We wouldn't be able to survive, okay? So she has no choice but to work till 66. Anyways, to make a long story short, I took out an equity line. Me and Sandy took out an equity line of credit at Citizens Bank out of their house last year in November 2011 for $75,000. Okay, it's not all gone yet. Okay, it's not all gone. We didn't party with it or nothing. Okay, the thing is, here's the story. I had a new furnace installed, high efficiency, last December 2nd, 2011. I collected the 350 rebates from National Fuel. I got the $500 federal tax credit also for it. That was you had to have the furnace put in by December 31st of 2011. Right. Okay. Right. Now my
Okay, I spent $33,000 out of that 75 so far. I had to have a complete roof tear off in June of 2012. And
I know where you're going.
And all new wood applied.
See, the thing is the maximum credit. The maximum credit.
Maybe he wants to know about the equity.
What I wanted to ask you was, is there any kind of a credit for spending that kind of money?
Nope.
Not for a roof tear off?
$500. And you already took it when you put your furnace in, so unfortunately,
the furnace was put in December 2nd, 2011.
Now, let me ask you this, because I may make you happy. May I ask what your wife's income is?
Oh, it's only like 26 a year.
So why doesn't she start collecting Social Security?
Because she gets their report every year, and me and Sandy, we looked at what she's eligible for to collect.
All right, so she makes 26.
Yeah, only 26,000, Esther.
Okay, so she's over the max.
Yep.
Yeah. Well, in the year she turns 65, in that year, if she makes less than 45,000, she can start collecting. So she doesn't have to wait till full retirement age. So as soon as she can, have her start collecting. Okay.
She's the head cook here at a nursing home in Hamburg, and she's got real bad arthritis in her hands and her joints.
Wow.
And it's not rheumatoid; it's regular arthritis.
Sure.
And she's the number one cook. And she keeps saying, "Hey Joe, Lynn's 62, and she's going on Social Security on February 15th." I go, "Don't you wish you could do that, honey?" And she goes,
"Yeah, I know it's terrible." But in the year she turns in the year that she's turned 65, if she makes less than 45,000, she can collect Social Security. So make sure she does that. Okay.
Do you know why? She's at her cap now. She's only making $13 an hour.
And Joe, I want to tell you, thank you for serving our country.
They'll let her start collecting.
So she can.
In the year she turns 65.
So she can start at 65 instead of 66.
Yes. In the year
she's food shopping right now. Wait till she gets home.
45,000.
She'll be excited to hear
Social Security
at 65 because Esther, they were already all told. There's no more raises.
I know. In the year she turns 65. And if you want to call me on Monday at the office, I'll tell you a secret, and I'll tell you why I know. This is
635-1515?
No, that's our office number is 632-7886.
Right. And if you call Auntie Esther on Monday and ask for me, I will tell you why I know. Okay?
Number again, please.
632-7886. Thanks, Joe.
Thanks, Joe. And we're going to go back to Pat. He came back from wherever he was in the land of hold. Hey, Pat, how can we help you?
Hi, Esther. Love your show.
Thank you.
Question is regarding IRA distribution. I know it's 70.5. You must start collecting from it if you had not in the past. Is there a certain amount? Is it a percentage of the fund value, or 100 or 1,000 or a week or whatever?
All right. So, guys, tell Pat how it works.
Off the cuff, Pat, in the year you turn 70 and a half, you can either take it within the calendar year of that you turn 70 and a half, or you could wait till the following April 15th to take that distribution as well. But then if you do that, you got to take two distributions in 1 year. And then as for the calculation, off the cuff, and I can't remember the exact figure, but I believe it's 27.4 or something like that. Yeah.
Of the value of what you've got in it.
And it's a divisor. It's not a percentage.
Pat, they're projecting you're going to live another 27.4 years. So whatever you have in there, you divide it by that chart figure, and so if you had 274,000 and the percentage was 27.4, you'd have to take out 10,000 a year.
I see. And should you have taxes deducted from that?
Depends
on how big the distribution is.
And your other money.
Right, and what your other income is. But I think the best thing to do is, I know it sounds like we're trying to get you to call us, but we're not. I'm trying to help you. You can go to egtax.com, or you can call us at 632-7886. We'll ask you a bunch of personal questions that we hate to do over the radio, and we'll tell you exactly how much to withhold.
Great. Okay, well, I've got time because I just turned 69 just a couple days ago, but I'm just thinking that.
Oh, you do have time. You do. Right. You're just a young chicken.
Oh God, I feel 99 some days.
So the truth is, when you're
to Larry in Buffalo.
Hello.
Hey, Larry.
Hiya.
How can we help you?
Okay, thank you. My sister and I inherited our mother's home. She and the home are in Indiana. I'm here in Buffalo.
Okay.
She passed. My sister sold the home. We share and share alike as a result of the will. Just wondered what my tax liability would be. I'm 71 and on Social Security.
All right, so somebody give him good news.
Well,
stepped up
basis because it's an inheritance. So at the end of the day, Larry, instead of getting the basis where you have to figure out how much they bought it for and all the improvements, you actually get the value at date of death, and that goes up against the sale price. And if there's a gain, that gain is what you're going to pay tax on. And judging by what it sounds like, if you're just on Social Security, chances are you're going to be in the 15% bracket or lower, which means a 0% tax on the federal for you, and probably somewhere around 5 to 6% on the state.
Oh, okay, super.
All right, very good news.
Okay, very good. I'm glad I called.
Thank you, Larry.
Thank you much.
And let's go to Fredonia, and we'll talk to Mary. Hey, Mary, this is Esther Golias from EG Tax with Steve Jacobson and Tiffany Fabian.
Hi, Esther. I have a question for my daughter. She called me the other day. She just graduated from grad school. She got her master's and finished her final rotation. And she's got to take, like, the boards, and they cost, like, about $600. Are those deductible on her tax?
Okay. So, Steve, Tiff, you want to give her the answer?
Mary, was she already in the field, or is this a new field for her?
This is a new field. She just graduated.
Okay, so then, unfortunately, in order to take the deduction, it has to be that you're already in the field or something to maintain your existence and ability in that field. So, no, it doesn't sound like it's something she can deduct, unfortunately.
Okay, she didn't know if it was something, with the school.
Well, she'd have to itemize anyway. So
she doesn't itemize.
If she's a single lady, her itemized deductions would have to exceed $5,950, and so and then it's limited by 2% of her adjusted gross income. So any expenses you incur to maintain or improve your present job skill are deductible, but to qualify you for a new field, it's not deductible.
So unfortunately,
I will tell her.
All right, thanks, Mary. Okay, and then let's quickly go to Gina in Amherst. Hey, Gina.
Hi. What I'm calling about is if you forget to do an RMD by, say, the end
wait, hey, hang on, I'm going to have a heart attack. You forgot to do your RMD?
Well, maybe, did you just turn 70 and a half?
No, what happened is I'm older than 70 and a half. What I'm trying to figure out is I was already doing it, but then I thought I had it set up that it would happen automatically, and then I realized on, say, January 2nd that I hadn't done it. So what I figured out, I'm supposed to do this form 5329, but do I have to wait until April to submit it with my regular taxes, or could I send in the form explaining how I goofed up and...
No, you know. 5329 for exception to penalty is filed when you do your tax return. Okay?
So you have to wait.
But I hope you have a really good, like, were you in a coma?
Reason.
Yeah, I was. No, I was.
You were in a coma?
No, she wasn't. She wasn't.
I mean, that's a really good excuse.
She wasn't.
You really do need a good excuse to forget your RMD.
I mean, you could type up a letter to see if you can.
Certainly try to do that because it's a 50% penalty, right?
Yep.
Anyway, I'm Esther Golias, the tax lady. If you need tax help, Auntie Esther and her crew and all of our 27 offices are open January the 16th, 9 to 9. Don't worry about the deadline. We'll get you ready to go. We're ready to help you at EG Tax. 632-7886 is our phone number. And until next Saturday, I'm Esther Golias with Steve Jacobson and Tiffany Fabian. Have a wonderful week. Bye-bye.
Bye-bye.